In this video, you'll learn about two useful financial functions in Excel, the NPER and PMT. Let's get started. What NPER represents: how many total payments you need to make over the full lifetime of a loan or investment, given the interest rate and payment amount. In some loan scenarios, you need to borrow a certain amount at the current interest rates, but you can spend only so much on each payment. If the other loan factors are fixed, the only way to adjust the payment is to adjust the term of the loan. A longer term means smaller payment, and a shorter time means larger payments. Excel offers a more direct solution in the form of the NPER function, which returns the number of periods for an investment or loan based on fixed payments and interest rate. Here, rate is the fixed rate of interest over the term of the loan. PMT is the periodic payment, a negative value, since this is the money you are paying out. PV is the loan principal. FV is the optional future value of the loan. If omitted, the default is 0, and type is the optional type of payment. Use 0 as the default for end-of-period payments or use 1 for beginning-of-period payments. Now let's practice. For entering the rate, if annual rate is given, it needs to be divided by 12 to show the monthly rate. For PMT, enter the amount of the monthly payment, which is $750. Please note that this value should be entered as a negative number since it represents a payment. Then enter the loan amount. The FV and type will be set as 0 in this example. Now let's look at the PMT function. When negotiating a loan to purchase equipment or a mortgage for your house, the first concern that comes up is the amount of the payment you'll need to make each period. To return the amount of payment for a loan, use the PMT function. Rate is the fixed rate of interest over the term of the loan. NPER is the number of payments over the term of the loan. PV is the loan principal. FV is the optional future value of the loan. If omitted, the default is 0. Type is the optional type of payment, 0 for end-of-period payments or 1 for beginning-of-period payments. Now let's practice. Suppose you'd like to find out how much you have to pay monthly over 48 months considering the loan amount. The annual rate has to be divided by 12 to give the monthly rate. The term of the loan is the NPER, which is shown in months. The loan amount, the PV, and for this example, the FV and type could be set as 0. Please note that the payment amount is displayed in brackets, showing that it's a negative number since it shows the payments. I hope you liked the video. For more updates, don't forget to like and subscribe.